because you are obliged to pay zero.
Yeah,
So that is not the case. So your question was why people would want debt, right? Instead,
exactly. If they
yeah.
can raise equity with the same brand,
No, no. Equity is always the cheapest cost of capital. But what happens is, as I said, right, ownership dilution happens in equity. So, for
okay.
example, if I want to build an airport, say in Bangalore, okay, and 50,000 crores is needed as
Uh-huh.
equity. 50,000 crores is needed to build that airport. Now, if I have to bring in full 50,000 crores as equity, who will bring in that equity? So the way it has been done historically in India is not the most efficient, but yeah, in practicality also, also 50,000 crores needs to be invested. So who will bring in that equity? Now 50,000 crores can either come from BBMP, the local municipality of Bangalore. But does BBMP have access to 50,000 crores? Maybe, maybe not. They could sell enough land to get that money, yes. But are they smart enough? Do they have enough powers? Because of the political gimmicks that happen. So generally, they don't dish out so much money. So then it goes to the state government. Now, the state government, can they give 50,000 crores to build an airport in Bangalore? Yes, definitely. But will they do it? Probably not, because they are not the only ones who will benefit. And if they are doing it for Bangalore, other cities will ask, why are you not doing it for us? All kinds of mess happens. Okay, so then they
Right.
go to the center. So then, okay, 25,000 crores can be given by the central government and 25,000 crores by the state. Now, generally, both these people say, no, no, we don't want to give 25 because it is too much money. Itna nahi denge. So what they will say is, okay, let's do one thing. We will put in 10,000 crores, and the rest 30,000 crores we'll ask the banks to finance. So the 10,000 crores that comes from the state and the central government is free money, because on equities you are not obliged to pay dividends. Once profit goes up and all, we will think about dividend. First few years you pay nothing. So the rest 30,000 crores can come from banks. Now, when we approach banks, we have to pay them something. So that is how
I
debt
agree. I
comes.
understand. Okay. But Nishant, on the other route, apart from the governmental agencies, why couldn't they raise it from the market itself directly? So similar to what uh,
Market means you are saying, say 50,000 crores, you give 10% stake in that airport to Reliance and say put in 5,000 crores. Give
exactly,
another 10% crore to Infosys and say you put in 5,000 crores. Yeah, they could do
exactly,
that,
yeah,
right? So that is what they call PPP, private public private partnership. But then they need to give them enough terms, right? Now in India, politics trumps economics all the time, every time. Not just in India, globally, but in India more so. So then they
okay,
went go to Reliance, but the deal is not good enough for Reliance, because they will have hundreds of clauses which Reliance will not like. So they will say, "Who wants to deal with you? Get lost. We have other
yeah,
sources of money." 1 second, 1 second.
no worries, yeah.
So, so Nishant, I have one question as well. When we say the equity is the lowest, cost of capital,
Oh,
has the lowest cost of capital, but doesn't it make, it makes sense that, the equity providers, I'm not talking about the retail investors, but about the, the person who owns the share of the percentage of the company, like, in the public-private partnerships, they tend to get some benefit out of it.
hmm.
Hey, Nishant, you there? I think we
I,
lost him.
I think Nishant is attending to some other thing. He just asked us to be excused for a minute, right? Nimit, actually, that's a very fair point, and that's where I was thinking. I mean, for the PSUs, what Nishant told us makes sense, right? Because there are a lot of litigations on the ownership and the term and tenure, and how do we actually monetize the dividends, etc., etc. But for private companies, there's no reason why, if debt is actually more expensive than raising capital through the market through private enterprises, like similar to what Reliance is doing with Facebook and Google. If they have enough brand name, there is no reason why they should go for debt.
That's correct. But
Can you guys
only
hear me?
for, hey
Yes,
Nishant, yes,
Nishant.
we can hear now.
Okay.
So Nishant, I had this one question. When you said that the cost of equity is very less, I mean it's nearly to zero because people are not obliged to pay the shareholders. But I think that is only true for the retail investors once the company share are traded as ETS, right? Not in the scenario when there is a company still private limited and it's sell out its shares to somebody else, just like what Geo is doing to Facebook and Google, right? They are raising that kind of money, but definitely Geo and Facebook and all these companies will going to get some benefits out of it, right?
No, no, but whatever benefit is intangible, right? Cost of capital is zero, na? Geo is not at all obliged to pay dividend to Facebook. If Geo doesn't pay 10 years dividend, Facebook cannot sue them. So
Let's
Geo
say that. I mean, I'll
say
take I'll
no,
talk
no. See,
from the
cost of capital from a financial perspective. Simple. I will answer this question. This will be crystal clear. So Geo got $7 billion from Facebook. That is 50,000 crores. Geo will pay zero to Facebook for next 20 years. Facebook can do nothing. No dividend, nothing. Facebook can only
but
sell the stake. They are only thinking of capital appreciation, which may or may not happen, right? That is risky capital. So from an investor perspective, it is risky that you are risking a capital for capital growth, but your fixed return is zero. From a company perspective, the cost of capital is zero. So equity is always the cheapest cost of capital. The only thing is it is dilutive to the current shareholders. But when you are starting, like the example I gave, you are building an airport and all, you are starting from zero. You are bringing in money for the first time. You just have a plan on a paper and you are trying to build something. What happens is even at that time greed comes in. The state and the central government think, why should we share it with private players? We will only keep all the malai. But ideally
yeah,
they could take 5% like Vivek mentioned. Say Bangalore airport could have easily given 1%. Say it took 1 lakh crores to build the Bangalore airport. I don't have the numbers, but let's take hypothetically. They could have given 1% to Infosys. So there are two kinds of equity investors again. One is a purely financial investor and one is a strategic investor who will also come with the technological know-how. So they could have sold 1% to Infosys as a purely financial investor. Infosys has about 90,000 odd crores floating around in its balance sheet, which is used for nothing. So Infosys could have given 1,000 crores as a financial investor to the Bangalore airport and got some intangible benefits. Like for ads and all, they could have got premium spacing and all without paying a lot. That could be another intangible benefit for Infosys to come in. And for the Bangalore airport company which is formed, it is free capital because for 1,000 crores they are obliged to pay zero dividend for the next 20 years. Similarly, they could have taken 1,000 crores from Buyercon, 1,000 Mr. from Premji and all that. So they would all be stakeholders, equity stakeholders. And that would, by that much amount, the amount invested to be invested by the state and the central government would keep reducing. But they don't do it, right?
Yeah.
Because for their own reasons, because of their own mismanagement and all. Like yesterday, they fired the BBMP commissioner because he went against BJP and said, "Ki boss, lockdown should be there for 3 weeks." So BJP said, "Get lost. We don't want to extend the lockdown." So they fired him. Fired him means transferred him.
yeah. I understand, Nishant, but my thought was that the opportunity cost of the equity is always greater than the cost of the debt. For an example, if I'm doing a business and I'm putting 1 crore rupees in that business, I'm expecting to get a return of at least 15 to 20%, right? So that is the opportunity cost of the equity. While I can get the debt at 8% or 9%, right? So that's the difference of around 7 to 8% between the opportunity cost of the equity and the cost of capital for the debt. That's why major companies take the debt rather than raising for the equity.
No, 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 no. You are getting it completely wrong, right? So you are looking at opposite perspective. You are looking it from an investor. So as an investor, if I am going to put in 1 crore in my company, the opportunity cost is never the 15%. The opportunity cost is so what you are calling as opportunity cost is the expected return from your equity investment.
Exactly,
The
exactly,
opportunity
exactly.
cost is always the RFR, the risk-free rate. So the opportunity cost is always that if I don't invest 1 crore in this business, what will I do with it? I will keep it in the safest investment available, which is say buying usually the central government bonds of that country. So in India, the opportunity cost is the tax-free GOI bonds which the government of India issues, which pays around 6.5% annually, tax-free. So that is your opportunity cost. So I will get 6.5 lakhs for doing nothing. उसको ऐसे ही रख देंगे. So if I am going to invest somewhere else, I want much higher return. So if I am going to invest in a company, I want at least 15-20% because I am taking risk. That is what you would look at as an investor. But from a company perspective, so that is where I'm saying. So from a company perspective, equity is free of cost. So if I am setting up this Bangalore airport company, I would love to get 1,000 crores from Infosys because it is free money for them. Will Infosys give or not will depend on what they are getting. So Infosys will only give because they want to be associated with the Bangalore airport brand and all that.
Okay,
But
I'll take an example. Nishant, I'll take an example because right now it's still confusing for me. Let's take an example. I'm setting up a company of 100 crore
अभी
rupees.
क्या
Okay?
confusing है? अच्छा बोल हाँ.
Word that's I'm telling her. I'm setting up a company for 100 crore rupees. Let's say, ठीक है? मतलब इसकी valuation 100 crore rupees है, and then I've established a brand and established a company which is running very well, and it is giving me an
100 crores is
annual
what? 100 crores is what?
equity.
So equity means you are starting a company today by putting 100 crores.
Yeah, basically, let's say that I have already built up a company in last 2 years, and I have got some investors, and finally my company
building
is.
up, after building up, it's a totally different story, right? Day one का बात करो, not after building up.
Let's say that even starting from the day one, ठीक है?
Okay.
I'm building a company. I have put my own money of 100 crore rupees.
Okay.
And then I have invested that money, and all that money has gone into expanding the company, ठीक है? And it was working fine for 1 year, 2 years, and then year on year basis, my company is growing at, let's say, 20%. For an example, just say that. Okay.
No, so
And
you
I've
need to
started
give all the numbers,
I've
right?
started-
So say you started your company today, or say today is July 19, 2020, 2 years ago, July 19, 2018, you started your company with 100 crores as initial capital, which you putting from your pocket as equity. So only alone you have invested, which means all the 100% of the share is owned by you. Okay.
It's owned by me.
Okay.
And
Then first year,
that,
how much sales your company did?
let's say that I have got a sale of 50 crore rupees.
In the year
And
one.
then on
Wait. In the year one, you did a sale of 50 crores. What was your profit margin?
let's say 20% was the profit margin.
So basically, your profit was 10 crores after tax.
Right.
Let's take PAT.
Right.
So your profit after tax was 10 crores. First year you invested 100 crores, you got 10 crores. So your ROI was 10%. 100% you are the owner. It is a private limited company. So you are the single shareholder. 100% ownership is with you. Okay. Second year, what happened?
Let's say that my revenue and my PAT grows 20%.
So your revenue grew from 50 to 60 crore. Your PAT grew from 10 to 12 crores. So second year ROI was 12%. Okay. Done.
Right. Then similarly for third year as well, 20% growth.
Yeah. So now your revenue is 72 crores. Your PAT is 14.4 crores. Okay.
Right. Now I reach a situation where I can see that there is a growth, further growth I can, potential growth I can see, and I can grow my revenues from 20% to 40%, let's say. But for
You can
that, I
increase
need.
the growth rate of revenue from 20 to 40%.
Right.
Okay.
But for that, I need additional money to do that. Then what is the suggested way to going? Raising an equity or raising an debt?
See, okay. So here it depends on you, right? So as the person who has 100% stake, are you ready to dilute your stake? Are you ready to go to 90%? Wait.
That's what my question
No.
was. That if
So wait, yeah. So here the cost from a company's perspective, the cost of equity will always be cheaper. See, understand in accounting, in finance, you are separate, company is separate. You are a investor in company. What happens is people do not understand this most of the time. So you are Nimit, your company is ABC. You own 100% of ABC, but you are not ABC and ABC is not you. So if ABC has to make a logical decision, the best decision for ABC is to raise more equity because ABC is not obliged to pay any dividend if it raises more equity. What happens is most of the time Nimit thinks that he is ABC and he thinks, boss, why will I part with my some stake of ABC? So I will go for debt. And then sometimes it becomes like Mr. Kishore Biani where his company itself is gone from his hands now. उसने इतना debt ले लिया. So that is what the game plan is. So what if ABC has to make a choice, it will always go for equity. But ABC doesn't make the choice, right? Nimit makes the choice. So he doesn't go. But for ABC, the cheapest source is equity. Because ABC is neither obliged to pay dividend to you, the ABC will neither be obliged to pay dividend to Vivek.
Then all the profits which are being made within the company, who holds those profits?
Means the profits are held. So right now in this case, the example you gave, first year you made 10 crores profit. It will be in ABC's account. Company has
Right.
its own account, right?
But eventually, let's say that if I am the owner, or let's say I'm the owner of a company 100%, that I'm going to get all the profit, right? But let's say that if that the
You,
share of the companies was divided like 60% between me and 40% with Vivek, so I should be at the end of the day when company gets dilute, I should get the 60% of the profit, and Vivek should get the 40% of the profit, right?
Arre,
That's
nahi,
how
nahi,
it is.
wait. Yes, correct. Theoretically, right? But practically, all the dividend payout ratio is not 100%, na? So first year, so that is where, right? So don't jump to too many things. That is why you are getting confused. So say first year you made 10 crores as PAT, right? What we discussed. Now, did you
Right.
distribute the whole 10 crore as dividend? So
Not really.
if you had distributed the whole 10 crores as dividend, right, you would have paid in India, I think there is DDT of 25% or something. So 2.5 crores government would have taken because they have already taxed you, but they will tax us again in DDT. So 25% will go to the government again. So that is double taxation. So net 7.5 crore will come to Nimit. So on his investment of 100 crores, his return is 7.5 crores. But after DDT, dividend is tax free. So 7.5 crores Nimit can show aram se pure white money, no problem. Okay. And Ranjit, today you started the recording. From next time, no recordings. Okay. People who don't turn up don't get to learn. That's it. I'm done with recordings. People have made this a joke that they'll be on WhatsApp and not attend the sessions. So we will not record going forward. I will put it in the group also. People want to learn, they should be in the session. And or if there is any very specific reason they are not able to attend, we will see. So if you are distributed, you will get 7.5 crores. In other countries, there are other taxation laws. Or if that is not the rule, the government will say, okay, company will pay nothing. Full 100% dividend is paid. So 10 crores, you pay out the full 10 crores. But once it comes to Nimit account, he has to again pay the tax. So because of this Jamela tax issue, a lot of companies and a lot of the investors, what they say is don't pay dividend, keep it in company's books only. We will use it when we need. And then what happens over a period of time, this keeps accumulating 10, 12, 13. So within 10 years, you will see the company has 300 crores accumulated, what we call reserves. Now this 300 crores companies usually sometimes give special dividend, but not always. So they will then utilize this to buy other companies or do something else for expansion, etc. That is how this corporate cycle keeps going.
Nishant, this DDT is regardless of your income tax bracket?
Yeah, DDT you are not paying. So there are two ways to tax money, right? Earlier it was in the hands of the investor. Now they changed it. Now basically whichever company, so say you have Infosys shares, Infosys will give the dividend, and whatever dividend comes to you, it's fully tax free. So you don't pay anything as an investor. Company takes care of it. But company pays twice. First they pay income tax on the PBT, profit before tax. Then after that, profit after
Okay,
tax, whatever
I
is
see.
left, they pay again DDT. Government is double. That is why people get frustrated now. Who is paying too much and no tax on agricultural income, which is a joke of the day.
Right. I have another question with regards to like an FPO like we have seen recently with Yes Bank. So what exactly is happening with the existing shareholders? I mean, if there's a new FPO, there are new um, uh, shareholders in the market. So is it like are the shares existing shares affected in any way?
Yes, it is dilutive for them, right? So as
This part
simple
I
as
don't fully
that,
understand.
it is as simple as right now. Say they had 1,000 crore shares outstanding in the market. Now they issued another crore shares. So now they have 2,000 crore shares. So your EPS will actually fall in half. So we need to see how much percentage they diluted. So what was the number of shares before the IPO, FPO, and what is the number of shares after the FPO? I would assume it was somewhere in the range of 5-10%. So earlier it was 1,000 crore shares, they issued another 100 crores new shares. So 10% dilution has happened. So
I see.
instead of EPS being calculated, so if the total profit was 5,000 crores, EPS was 5. Now it will be 5,000 divided by 1100, so it will be 4.8 or something. So your EPS will fall by whatever, 7, 8%, 10%. Check the numbers.
Okay.
I can calculate and give the number.
Yeah.
I have a question. It is regarding the shareholding pattern of a company. So I was confused actually. So according to me, there are two types of shareholders, right? Common shareholders and preferential shareholders, and there are the promoters also, right? So the promoters are a part, can be a
No, no,
part.
no, no. Preferential shareholders are not the promoters. Preference share is a totally different topic. All the
No, but
shareholders are common shareholders.
okay, okay,
Okay, but in the US, this Facebook drama started Class A, Class B, but that is for another day. Okay,
okay.
because the topic is today not Class A, Class B. Topic was debentures. So is it
So so
clear? Shall I move on?
so there is three shareholder patterns, right? One is the promoters, one is preference, and one is common. Something like
No, no,
that.
only common. Promoters are common shareholders only. Type of share is only common and type of share is only common and preference.
And
Type
promoters are common shareholders. Got it.
always, yes.
Got it. Okay. Thank you.
Common shareholder means one share, one vote, and no dividend, no claim on dividend. If there is
Okay.
no dividend declared by the company in 2020, common shareholder cannot say dividend नहीं दिया भाग यहाँ से.
Right. Okay.
You don't have any right to ask.
Got it.
They cannot even open the mouth in their general body meeting. If they open their mouth, they will say get lost.
Right, okay. Thank you.
Obviously, it doesn't work in practicality. They are allowed to speak, but basically they have no right to ask. There is no legal case. They cannot file a case in Supreme Court. अरे वो कंपनी डिविडेंड नहीं दिया, किसने बोला था शेयर खरीदने? कहीं पे कंपनी लॉ में लिखा ही नहीं कि there is any obligation to pay dividend. Ranjit, stop the recording. This much is enough. If people are not attending, let them listen only to half the session.